Hi, this is just a quick overview of the results from year three. And we can see in net profits, we have a new leader in net profits. Bluth's original frozen banana stand. Um, Excellent job, almost $200 million in profits. Anybody over the $100 million mark, which we have about half our teams or so over the $100 million mark, that's also a very good job. So overall, everybody, you can pretty much see here that most everybody increased in profits year over year. And that's the name of the game because maximizing shareholders' wealth, increasing profits is what shareholders and principal owners are looking for. Okay, so in the points category, no one had lost points, which is good. We had two teams with a very small amount of points here, and we had two teams here with incredible amount of points, well over 700. And you can see the team with the most profits also has the most points. Um, and the number of teams over, I think we have four teams over 600, and the majority of us are between 400 and 600. Remember, you know, over 400 points is an excellent score in this simulation. Okay, so if we go to stock price, you can see that um, Philip Autos remains the top stock price, and we have a pretty tight grouping in here, and then we have like a third up in here, and some people trailing back down here. Which, if you want to increase your stock price, you have to start buying back stock, and you have to focus on increasing your earnings per share and your profits, and that will help generate a higher stock price. Um, Sales, and of course, we had a huge spike up in sales by Bluth's original frozen banana stand. So this is a company that really outperformed this round. So this company got total the highest profits, um, the highest points, and the most sales. So they simultaneously increase profits, increase sales, and that's what investors are really looking for. So the stock price increased by a great deal. Overall points to the management of the company increased a great deal. So this company really made I think, probably the best set of decisions. So if you want to improve your score, I would say check out this company and see what they did last round, what changes they made from round two to three, that they got such a huge return. Okay, so our last category is earnings per share, and we have almost, perfect trajectory of Philips Auto here, maintaining and increasing their earnings per share, almost perfectly um, perfect slope here, with very little. I mean, incrementally increasing about the same percentage every round. We had a few teams here. You could see that Bluth greatly increased its earnings per share, and we had I think this company came in. This company's been in second place for a while. Um, and then everybody else is sort of, we're in this tight pack here. But you can see how we're spreading out. So here's the pack last round, and now we have a much more dispersed, a lot more. So as the game moves forward, the dispersion, usually the earnings per share becomes greater. Okay, so let's see. So here's a hint in the industry. So if we're looking at, the industry leader this round, which is Bluth's frozen yogurt, we could see that they had a very high market share for this simulation. Um, Very good gross profits. So I'm very interested to see what they did. I think advertising costs are very high here. So I think they advertised a good deal. They made enough cars to take advantage of the strong advertising, and they made cars with very good profit margins. So, and they had, in some categories, they had very high, extremely high cost reductions in two of their categories that they sold a lot of cars in. So, but what I was saying is this is their what they did last round, and you could go back to just this toggle switch up here at the top that you can go back to year two and see where they were in year two and kind of see, this will move us between year one, two and three, and you can kind of see what changes they made from year two to year three that generated such a great response in their sales and profits. And I think a part of it is just, just brilliant strategy. They uh, increased their cost reductions on the two cars that they really wanted to focus on. They figured out um, by advertising, having a strong advertising package, very strong, having a reasonably respected, um, car development as far as their characteristics, and just selling a great deal at a high profit margin. I mean, it's fantastic. I mean, I wish I was that smart this round. And if we let's look at my performance real quick in Professor Nugent's autos. I was able to pull out 500 points or so. Key thing here is I was able to increase my profit margins by 5 percentage points, and that's what everybody should strive for. Year over year, your profit margins from your gross, your operational, and your net need to increase. Because that drives the whole company, that drives the share prices, the market capitalization. So I invested, I was able to maintain and improve my profit margins. And I think that was the secret to any successful round. If you look at your profit margins from year two to year three, if they're not improving by at least 5 percentage points, you're not doing the best you can do. If they're flat or down, you're definitely going in the opposite direction. If they're only up 1, 2, or 3 percentage points, that's not bad. But I usually try to shoot for 5 because that seems to be a reasonable and attainable amount. Um, and then not so great in some of my asset multipliers because I invested a lot in my company. So my assets grew tremendously. So I could see why I pulled back a little bit on the returns of my assets because I increased my asset pool so greatly because I'm trying to gear up for a successful finish. Um, Now my earnings per share increased by 50%. My forecasts were really tight. I spent a lot of time analyzing and trying to detail my forecasts, and I doubled my operational investments, which earned me 100 points, and I made sure I had a surplus. So that's how I got my 500 points. Um, Operational investments are critical, and still a lot of companies are falling behind in making their operational investments, and they're going to find it harder and harder to maintain or increase their profit margins if they don't invest in that area. Okay, so if we look at you can see in my production, I had only 13 excess vehicles, and I did a lot of heavy investing in my operational investments. If we go back to charts, let's see on the individual charts, you can see that my points did pull back. It's from 1,000 to 500, but I'm very happy with 500, especially after coming over such a strong performance in year two. It's sort of like getting the A minus average and then or getting an A average in one semester and trying to beat it. You can't. So coming in, another strong performance is pretty decent. And remember, always check. So I guess the only error is luxury. I could have sold 50 more cars than I did. And maybe also truck, I could have sold 28 more cars. So my forecasting was really tight, which helps to keep me on budget. Because on my production, I'm always producing exactly what I'm forecasting to make sure my pro formas are accurate and I'm going to have a surplus. Because you don't want to have the unexpected deficit by having unsold cars, which some people develop. It happens. Now, look at the percentile rank. Plenty of teams did much better than me in points last round. So we had a number of people over 500, over 600, and two teams over 700 performing very well. And we had some teams down here that didn't. That performed, improved, but maybe no one had negative points. So every time you have positive points, there's an improvement, but still not full potential. And if we look at the gross profit margins, you could see that some of the teams that are behind in points are also low on their profit margins. Remember, we started at 40%. So if your company is below 40%, it's moving backwards since year one, and investors are not going to appreciate that. Now, some companies have profit margins above 50%, and that's generally where most companies should be in the 50 percentile area for this round. And that's a pretty 85 percentile beating 80% of the teams that played this simulation in the past. And we have a few teams with very high profit margins. And these teams are, of course, outperforming because they are focusing on increasing their profit margins. Now, you can increase your profit margin, increase the quality of your automobiles, and increase your sales. And that's what Bluth's uh, frozen yogurt banana stand, I believe they did, and that's a winning strategy. So they're well done to that company. Phillips Auto continues to do well, but falling from the top position they had in round one. Um, so this is important to look at. Make sure that you're always focusing on increasing your profit margins. And look to the stock market. If you see a company release earnings and they disappoint in their sales revenue or their profit margins, the stock price goes down greatly and investors get very upset. So every company that's public is always trying to maintain or improve profits and profit margins and sales because that's what investors are expecting and looking for, and that certainly helps their stock price. Um, okay, so this is very important. Let's see. So stock prices, there's a big range in stock price here. And that's just, I mean, small decisions can really make the difference between being number one and being number 10 in the stock price. So that's um, certainly a strategy to help the stock prices when you start buying back stock. So if you have some extra funds, that's certainly going to help on the buyback. And if we look at total points, remember for the class, let's see. I know this is off center a little bit, but there you go. For the class, we're striving for over 2,500 points. And then your score goes down based on the points you have after that. So if we look to, and this is just 3 rounds of results, and we could see that a number of teams are very close to 2,000 already after 3 rounds, and we have 2 more rounds to go. So it's quite possible for everybody in here that are at least, about 1,500 points or so to get that full score. They would just look to try to make 500 points, at least 500 points around completion of round 4 and completion of round 5. Now, remember, we're only going 5 rounds on this simulation. People who are less than 1,500 points, you want to maximize your points as well. And if you're coming off a weak round, you could really increase your points dramatically the following round. So just keep that in mind. And again, for the teams that are under 1,500 points, I would recommend do what you can to increase your profit margins and your sales. And if you want additional ways to test your theories, go into the individual practice. You can run that as many times as you want to get a feel of some of your ideas and test them out in there. Don't test them live in the team competition. Try to run some of your ideas and your setups in the practice to see how they perform. All right. All right. So operating profit margins, incredibly, Bluth's original frozen banana stand. I think they just want to be first place, so I say that a lot. 100%, they beat every team who's ever played this game in their operational profit margins. So just a fantastic performance. Earnings per share for Philip Autos is the highest, and that's because Philip Autos has done an aggressive buyback on their stock, so that makes sense. And then our net profit margins, we lose a lot in our net profit margins from our gross because of all our marketing and operational costs, which we basically know. Okay, so I'm not going to go through everyone here. Let's just go back to the industry charts, and I'll show you, give people who didn't perform so well, I'll give you a little hope here. If you look at, the points per team, these points, some of these teams are coming off of, rounds that weren't super spectacular, and they're able to greatly increase their points. So, you can have a bad round, such as this company last round had 126 points last round, and they were able to increase it to 600. So just because you didn't have a great round doesn't mean you can't. In fact, it makes it a little easier the next round to beat. It's sort of like going from a C average to a B average. You're going to, it's a lot easier than from a B to an A average. So, overall, I'm very happy with everyone's performance, and I think teams that are doing very well are learning a lot, and teams that aren't doing very well should be learning even more. So overall, I would say that this is a good learning experience for everybody. And you know, if you didn't perform up to what you hoped you would perform this round, don't panic. You can still go back and focus on increasing your profits, reducing your costs, uh, and have a better performance next round. And I do encourage you to go to the individual practice and run a few rounds and try and duplicate what you're doing in the team competition with your strategies, your idea. I saw one student trying to do a economies of scale and try to produce the most cars possible by advertising heavily and making the highest customer expectations. Now, that strategy can work, but it's a delicate strategy because if you are sacrificing your profit margins to have a more attractive car, you're going to wind up with less profits. You may have more sales in total units, but if your net profits are going to be lower, is it really worth it? And most companies today say, if they can't make an economies of scale strategy in a way that will increase total profits, they don't go for it. So just keep that in mind. It's sort of like the old buy.com website. They wanted to have economies of scale, so they sold everything everything they sold was under the prices were under their cost, and they figured that they'd make the money back up by people coming to advertise on their website. Well, it turned out that they sold everything they sold. They wrapped the saying was they were wrapping a $5 or $10 or $20 bill around it when they mailed it out to you. And their losses were never advertising was never able to make up for their losses. While Amazon went in a different direction, and they were focusing on their profits. And we could see how the story of those two companies, one wound up bankrupt and delisted, and the other one wound up being the number one of the top performing stocks over the last 10 years. So again, it's all about the profits. Okay, so that's it for this quick recap of this round. I hope you found this helpful, and remember my basic guideline for improving your score: increase profits, by increasing prices and reducing costs. Um, Practice in the individual practice rounds to test your development of your cars and your advertising strategies, and that should help a great deal of kind of estimate how your performance will be in the next round. So I wish everybody the best for moving into let's see, I just want to make sure. Moving into round year 4. So we have year 4 to complete and year 5 to complete. So I'm very happy with the majority of the class's performance. And I think that by the end of the simulation, you'll find that most students will make the full 2,500 points and get the full score for this assignment. But you really do, at this point, you really do have to work for it. You really do have to put, if you're behind, you're really going to have to put a little extra effort in to make sure that you can perform at the higher level. So I encourage you to look at what the other teams are doing in the industry page, analyze, produce a strategy, and excel. Okay, I'll talk to you next week. Have a great weekend.